In this video, traders, we're going to look at address these trading habits now whilst you are trading small, because when you start to scale up your position size, these won't be so forgiving. Stay tuned. Hey traders, warm welcome to you. All right, so these are some of the things that you really need to get on top of now and address now, because when you start to trade more size, man, these get amplified tenfold. You might think that they're okay now, and you might think that they're going to be a little bit worse, but it's almost like it gets ramped right up as soon as you start to scale up into bigger sizes, more meaningful and more what you're trying to trade. So, you know, it's the kind of thing that nip in the bud now where the damage is relatively small and you're kind of in that phase of trading relatively small before you start to turn up the wick on the risk. Because once you do that, it's too late and you will end up making a mess of things. Some of the things that come to mind, and guys, you know, if you're in the phase of maybe looking to scale up your position size, increase things a little bit, this is perfect for you. In the comment section below, always interested to hear what you guys have got to say. Okay, so not sticking to your stop or moving it might seem like a beginner mistake, but from time to time, maybe you do it. Maybe you just move that stop a little bit. Maybe you go, you know what, I'll just take that out there and just see how it trades there. It's not so much that act, it's the doing it on the fly that's damaging. You might be okay doing it now while you're down a couple $100, but if you're down 10, 20 grand on the trade and you're doing it, you're gonna feel much more pressure when you're now down 30 grand on the trade. You know, the difference between 200 and 300 might be, oh, it's an extra, I shouldn't have done that, and you kind of take the stop out or you hold it, it comes back, but you'll be trading from a completely different mindset if that's 10 grand extra on the line than $100. So just be careful about, you know, doing these things that affect the risk, especially the risk on the fly, i.e. moving the stop now. And if it's in your plan that says you can move your stop under certain parameters or have some restriction on your stop and have a kind of safety net stop, fine. You know, your plan's your plan, that's excellent. But it's doing things on impulse that's the deadly part of it. All right, number two is breaking rules you set for yourself. So we all know this, right? This is nothing new and revolutionary here, but it's the kind of thing that you need to have locked down, absolutely solid, before you even think about scaling up. If you've got an issue with your discipline and your rule breaking while you're in a kind of moderate position size, it's going to smash you around the face with a baseball bat if you increase your position size, because the emotions are just heightened. As we said, you need to think about the order of magnitude of money. You're trading a couple $100, risk here and there, whatever it is, $20, $200, doesn't matter. You start ramping that up to 10 times that over time. It's not going to be so forgiving. If you're breaking rules about over trading, that could cost you 50 grand. You're breaking rules about over trading now, it costs you $500. You're like, $500. But this is the point, you know, you can shrug it off because you think you're okay with it, and all you can see is your bottom line going up, but you don't notice the landmines that are sitting waiting to get you in your trading strategy that you will step on when you start to increase your position size. So just watch out for that rule breaking. And you know, we go through this so many times, guys. This is so important of the discipline aspect. There's plenty of resources out there on the channel for you if you want to kind of do some more digging into that. Third thing is taking too much risk per trade. Easily done. You kind of see it, you take it, and because you're working on a moderate position size, even a double risk, you're like, ah, you know what, it's not the end of the world, that. But again, just think about how that will be if you add, you know, 10 grand to 20 grand risk. That might be quite significant, especially if, you know, the trade goes against you, have a couple of those in a row, all of a sudden you're down 40 grand. Were you expecting that? No, maybe 20 was your max, now you're down 40. That's quite a lot of difference, even though percentage wise it's the same from being 200 to $400, but it's the order of magnitude, or it's the actual money that creates the difference in your mind, the way you think about it. Trading for fun. If you are the type of person that sits down at the screen, has a punt, so to speak, it's not going to work, because you're going to get caught in a trade that you didn't want to be in. You'll instantly regret being in it. You're like, I wish I hadn't taken this. I just sat down. It wasn't part of my rules. I thought I'd just take a quick trade for fun. You're down 50 grand on the trade and it's stinging, and you just hate yourself for doing it. You hate the fact that you've done all that hard work. It's just a horrible thing to do. So just eliminate it. You're not trading for fun. Now listen, no point, I'm not saying it shouldn't be enjoyable trading, because it's an enjoyable process. But you know what I mean? Sitting down, picking a market, having a stab at something, taking a swing of the bat just because you feel like it. Eliminate that now, because that won't serve you when you've got some decent cash on the line. Fifth thing is not respecting event risk. Maybe you've held price or trade, should I say, over non-farm payrolls. Maybe you've held them over earnings if it's a stock. Maybe you've held it over the weekend. Maybe you've got away with it, and maybe it's part of your strategy. But you know, one time you get caught out doing that with size, you could be down 200 grand. You could be down a serious amount. You know, you might get away with it now and then, or you might have not even had a time when you've been hit by it. But it's, again, you've got to you know, really respect that event risk, because that can really do some damage if you're trading with size and you think, you know what, I've never been hit at non-farm payrolls before. All of a sudden, bang, they're well out of line, rips up, and you're getting smashed, or earnings suddenly out of line that you're not expecting. So respect that event risk, overnight risk, all the binary risk that we've got. The sixth thing, sorry guys, is doing zero reflection and trade analysis. Maybe you've got so far at the moment by doing a little bit of analysis, but if you've not done any, you need to kind of look and see what you're actually doing. I hate to say it, but you could have got a big chunk of your profits from just luck. You know, you have to be objective with this and go, well, if I'm going to start putting serious money on the line, I need to be 100% certain, not only from a logical perspective, but from a confidence perspective, that what I'm doing is as a result of my skill, not a result of kind of just some luck, and I've just got luck in a few trades and I'm riding that luck and I think I'm a genius. Sometimes it's a hard pill to swallow, but if you do the analysis and go, you know what, maybe I got lucky on those trades. Maybe I need to just stay where I am small just to prove this a little bit longer before I start dialing up the risk. Because if you're dialing up the risk and you've been riding just on luck, and listen guys, you need some luck in trading, of course you do, it's part of the deal, but if it's been more of a significant reason for your P&L than skill and than consistency, then it could work against you as well. But and the rule of the market is, guys, it probably will work against you just when you're at your maximum position size. The seventh thing is trading your way out of a losing hole. So if you're down a lot and you feel like you're trading your way out of it, that's a really bad habit, because again, when you start to turn up the amplification on the P&L and the position size, it just hurts so much more. You're down a hole, what you consider a hole, intraday, let's say a couple of grand down. You're like, oh, you know, I didn't want to lose 300 bucks, you're down 2 grand. You can stomach that. But when you start going that order of magnitude, you expect to be down 20, you're now down 300, that really hurts. And that really is not a place to be, because you're close to kind of really doing some significant damage to your account. So if you kind of had a couple of those, where you feel like you've got out of it, traded out of it, just be very, very careful that you don't do that again, because it's not representative of how you're going to trade. You're probably not going to be able to dig yourself out of a hole. You'll probably give up on it way before it hits that kind of level. You won't be able to trade the size, you won't up the margin. So many reasons why. And so, you know, it's not a case of just taking your results from that and 10xing them, because there's little things, these little dangerous habits that might sit in there and might be lurking to kind of cause you a problem. So if you're thinking of scaling up, just be careful, look through your habits, make sure, be honest, reflective with it, and just say, hey, is this good trading? Is all the things, you know, how am I doing? And if you've got some of these, just take some more time to deal with them, and then move on to the scaling up. And also guys, finally, it's not a video about this, but if you are increasing your position size, do it slowly. Don't go from 1 to 10 times, because that's a surefire way to kind of really hurt you. Just take it steady, 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 steady. Anyway, whatever you're doing, take care guys. Don't forget to check out our channel sponsor. The links to them in the description below. Take care, bye-bye.